Alrighty, so in this video, we're going to be having a chat about the New York session, both the AM and PM session. I'm going to kind of treat this like a review of the price, but also different opportunities, and you might have entered from something that I talk about, so let me know how you went. And if you have any questions about what I'm talking about, let me know, or just send me a message on TikTok. Now, if you trade the AM session, you know that macros are really important, right? There's one from 9.50 to 10.10. So the first thing that kind of goes to my mind is what's happening during this macro, right? That's the very first thing. Now, notice we've taken out this level of sell side liquidity. And if you're wondering what this is from the previous video that was on London session, how to get trend continuations and how to deal with price when we're in price discovery mode. But what we're focusing on today is right here, right in front of us. So we take out this level of sell side, right? We react to the upside. All this is all nonsense. That tells me nothing, right? So that is not trading. I'm not trading any of that. Now, where might I take a trade? I may take a trade right about here, right? Now, what's the reason for that? Well, we've taken out liquidity already. We've come close. Now, you might be like, oh, well, it's formed equal lows. But keep in mind, the price has been really bullish. So those equal lows could be then left till later on, and they could just be engineered. And eventually, yeah, we do take it out, right? We do take it out, and we'll talk about that later on. But you've got what's called an inversion fair value gap. And when price closes above that, right, you could go for a long position right here. Now, that's the first entry, stop below this low. Why would you go stop below this low? Because if we take out those lows, well, you're wrong, right? You wouldn't want to go like all the way down here. It wouldn't make sense because then you're losing more than you have to, right? So that's what I'd be doing. And where would your TPs be? You could probably get a break even somewhere around here, right? As we go like roughly 1-to-1. This swing high, I'd probably go to break even because again, right, you want to mitigate your risk, or I'd move this stop loss below this inversion fair value gap, right? There's many ways to do it. Stop loss below there, you target this swing high that you can see. That's your buy side, and anything extra is just like a bit of extra money for you. So that's your 1 to 1.4 risk to reward. If you want a 1 to 2, you can hold on a little bit longer and you can get that. Again, depends how tight you want your stop loss. If you really believe in this trade, you could go below that candle. And by doing that, you can see you don't need that much to get a 1 to 2. But again, sometimes I've found having a little bit of a wider stop loss is good because yes, you might get a slightly smaller risk to reward. You might not be getting 1 to 3s, 1 to 4s, or 1 to 2.5s, but you're able to take partials and you're able to mitigate your stop loss as you're kind of moving in that direction. So that's kind of what I see. So that macro, that would have been your entry, right? That would have been your entry. Technically, this is like internal sell side. You take that out, right? Fair enough. So I'm gonna mark that out here. So you raid sell side internally, right? So there's a swing low form there. Apart from that, let's kind of move on to see what happens. We progressively move upwards. Now, there's another macro. When's that macro from? 10.50. This looks like a beautiful day for price action. 10.50 to 11.10. Now, again, macros are time periods where you expect price to do something. That's your first macro, and this is your second macro. I'm just imagining I'm drawing vertical lines here and also there. Now, what happens during this macro? Well, at this point in time, like if I got the replay bar out, and let's say we were like right here, we're at all-time highs, right? There's nothing above us. So I guess if you're going to look for reversals, you'd be looking at the key time windows, and one of those key time windows is the macro. So if you have a bit of a look, what I'm waiting for is for something that's bullish to be disrespected, and we do get that right here. See this bullish gap? That gets disrespected. Right now, this becomes an inversion fair value gap, right? So I'm going to mark that out. And there's a couple of price signatures here that are kind of important to talk about, and I think they'll kind of help you out too. So that's your inversion fair value gap. Now, what I really like about this is that if we're going to frame a trade going short during this macro, right? See these two up close candles, they reflect an order block, right? So I'm just going to mark that out here. These two green candles, they are your bearish order blocks. I'm going to mark that out. I'm just going to say OB negative. So OB negative, bearish order block, right? Now, if I want to go short, that kind of frames a picture for me because I'll have 2 PD arrays, potentially 3 that support price, right? I'll have an inversion fair value gap. I'll have a bearish order block. And let's just see how this candle closes. Cool. And I've also got a bearish fair value gap right here. So your entry, if you're going with the 2022 model, this here would be your entry. And let me just kind of talk through that as we go through it. So that's your entry right there. Now you might be like, well, where's your market structure shift? Your market structure shift is below this swing low. That there is a swing low. So we break past that swing low, we create a market structure shift. You can see that there. And in doing so, we further break past this bullish gap. So there's further confirmation. Where do you enter from? From that CB. You could also enter from this inversion, but we've already retraced there. And let's assume you did something like this with your position. You put your stop loss a couple ticks above that high. And let's say you targeted a 1 to 2, right? What happens with price action? Do we reach that? That's a question. Now, again, we tap back into that CB and then we sell off. So this is a great example of the 2022 model. Great example, and a great example actually of trusting the macro. So trusting the macro from 950 to 1010 and the macro from 1050 to 1110. Because guess what? At this point, we don't know what's above, right? We don't know if it could keep going higher, but we have trust in the macro. I say that to everyone, have trust in time and then look for key signatures. So this is something that, I'm going to talk about a bit more, but it's essentially like a 3 PDRA support or resistance matrix. In this case, you've got 3 things that should support your trade. And I'll just write those out here. Number 1, you've got the inversion fair value gap. Number 2, you've got the CB. Number 3, you've got the bearish order block. So 3 PDRAs that support price. You want to be doing that with your trades, having at least 3 PDRAs. If you don't, you want to be having 2 PDRAs. If you only have 1 PDRA, it's a risky trade. It's not a high probability trade. So if we just play price out, let's see what happens at price. Let's see how far we come down, and we'll talk about that too. Right, so at that point, you've already got your 1 to 2. You should be satisfied unless you're leaving like a little runner, and then your stop's probably like at break even at this point. At this point, we're going into the lunch hour, 12 o'clock, and usually 12 o'clock to 1 o'clock will deliver price, and we'll make price run or spool quite a bit. So we'll see how we kind of deliver there. So we're moving high essentially. We're just going with the overall trend on this one here. Now, just so you know, I just want to mark out this from this swing low to this swing high. Now, whenever we're in a price action movement, it doesn't matter if you're bullish or bearish. The price action always moves from premium to discount, premium to discount, premium to discount, premium to discount. So if I was going for a short here, yes, a 1 to 2 risk to reward is great. But what you could also target is anything that's below the 0.5 level, because you want price to go past there to then retrace back up. And once it sits down there, you've got these 2 lows here. And notice how once we take out that sell side liquidity, that's it, we're done, right? So we move up here, that's our dealing range from this high to this low. We're looking for any PDRAs, any swing lows below the 0.5. Once you reach 0.5, you should either have taken partials, in my opinion, or you should be out of your trade completely. So you can see how we react from that. And then really we just push back up again. We find some support here out of this 1 minute fair value gap, quite small, and we create all-time highs. So again, 2 potential trade opportunities. If you don't like this first one, fair enough. There's not many PDRAs supporting it. So wait to the next macro, and there's beautiful trade. Beautiful, beautiful trade. So let me know if you caught any of these. Really nice trades there. This is kind of choppy price action. This is quite nice. Having a nice big order block there is great because it should support price. So that's a really, really nice price signature. And let's just play price out. And let's talk about now the PM session. Now, that there is quite a drastic drop. 1 drive, 2 drives, 3 drives, right? 3 drives pattern. That's definitely a market structure shift. Now, this here is called a breakaway gap. Right, I'm going to mark out all the PDRAs that I see here so you guys can use that. And again, like my previous video, if you want a specific class or YouTube video just on one type of PDRA, just let me know. But if you don't mind me doing these kind of videos where I'm talking about everything, that's also permissible. So what happens here? Lunch hour ends, right? Let's have a bit of a look. Lunch hour ends at 1 o'clock, which is here. What happens at 1 o'clock? That 1 o'clock candle creates this breakaway gap, creates this inversion fair value gap. So right away, there's 2 PDRAs here. 2 PDRAs supporting price if you wanted to go for a short. Now, what happens with price? We actually just sell off. So we don't actually return to that top breakaway gap or that top CB, and then we take out this level of sell side and just completely sell off. So sometimes if price is really bearish or really bullish, and I'll show you an example here, you have that market structure shift and you're thinking, oh yeah, when price retraces, I'm going to go for a short, right? It's happened to me. Oh yeah, when price retraces here, I'll go for a short. Perfect. We've got PDRA supporting. Beautiful, right? If it's really bearish, it doesn't need to do that. And what I've found often, if it's going to create a breakaway gap and we've had massive displacement, right, and we've taken out a swing low or multiple swing lows, then I'd expect that to act as a breakaway gap. So often then what I'd be anticipating is when you have some accumulation like this, price obviously is not really willing to go higher again, if that makes sense. So we've tried for like over 10 minutes. It really doesn't want to go higher. So what I call this is like accumulation and an expansion of price. And that's exactly what's kind of happened here. So no real opportunity as of yet to go short, as of yet. But let's kind of play out price. Let's just watch price action because we know that, 2 o'clock, 2:30, that's silver bullet. And then we got the PM session after that in terms of like macros and things. So if you have a look here, we do end up retracing back. But remember, that top gap still remains. That top gap still remains. So in terms of going short from here, right, it would come down to you having a strong bias that we're going to take out sell side liquidity, right? It would have to. It would have to because otherwise you'd probably be waiting for price to come here. And you might ask me, well, if you went for a short position from here, where do you put your stop loss? Well, you could cover the breakaway gap and the inversion if you wanted to really manage your risk and maybe target this swing low. That would work, right? If you really believed in this, when you start to see some rejection to the downside and you create another inversion fair value gap, maybe you create an inversion right here. As you can see, that's another inversion on the 1 minute time frame. Maybe if you want to be really risky, you enter on this candle close and you put your stop above that high or above this CB. And again, you ride it to that swing low. Whatever kind of works for you. There's many ways, right, to, I guess, approach different PDRAs. And it depends on your risk tolerance and also your psychology. So people ask me this all the time. There's not one cookie cutter approach, unfortunately. Yes, you've got the silver bullet entry model. Yes, you've got the silver bullet time frame. Yes, you've got a fair value gap, but how you use that fair value gap, where you enter from in terms of that fair value gap, it's all dependent on what you kind of see and what you're willing to tolerate in terms of, are you willing to take, a loss from having a risky entry and then maybe come back and make a 1-3, or would you rather like a 1-1 or a 1-2, right? So this is really nice price action, by the way, really nice price action. So I just want you to look at this and look at the mirroring of price. Like, you've got this little hump, you've got this little hump. This essentially is the buy side of the curve here, and this is the sell side of the curve. And you might be wondering, well, are you talking about the market maker buy model? Yes, I actually am. So I'm talking about these relative equal lows here in blue. And what I pointed out yesterday on the Discord, right? All this price action here too. And more importantly, all this accumulation here too. So on the live call that I did with my Discord group, I went through that, if we're not going to come down during London session, we're probably going to come down during the New York session, which is exactly what happened. And you can see the retracement that we're having here. Again, buy side of the curve, sell side of the curve. Potential trades, one from here and one from here. That's for the AM session. PM session, again, I'm kind of showing you different ways you could frame it. You could go here, enter right away as we tap in, stop loss below those PDRAs, take profit there. That's one way to do it. The second is to enter from this inversion, stop loss above this CB. Whatever works for you, right? Whatever works for you. And technically, we do actually tap into that CB right here. So you might have got an entry there and done the similar thing to what happened here. Could have been the same kind of process. Depends on if you had a limit order or your market executed. So range of ways to do it. You could have entered from this inversion fair value gap too. And all this is obviously hindsight. I didn't trade any of this, right? But this is all hindsight for you if you're studying how you can enter from different PDRAs. And this is what I mark out when I'm watching price. Now, let's keep playing price out. Now, there's a macro from 315 to 345, and there's also one from 250 to 310, which ICT also talked about briefly before. Now, I'm going to switch to the 30-second time frame and just go through a trade that I took and the reasons why I took it, and I guess how you could execute similar trades if you're willing to do that and if you've got access to the 30-second time frame. So these are AM session lows, relative equal lows. It's time-based liquidity, right? AM session low, opening range low. Opening range is from 9:30 to 10, right, by the way, and that's what I'm talking about there. So We take out liquidity at this point. Now, on the 30-second time frame, the reason I'm going there is because I want to see what happens on a smaller time frame, then I can start to scale out. I noticed, right, this bearish gap here from this candle's low to this candle's high got disrespected. So I treated that as an inversion, and I actually entered one position here like this. Right there. Right there. And you might say, where was your stop? Below this low. And you might say, oh, well, what kind of risk to reward are you getting? It's not that much, right? But let me kind of explain how I mitigated that and how the risk to reward ended up being not too bad after my multiple positions were taken. So I took a position there at the candle close, right? Using that inversion. As price retraced back in, I took another 2 positions, so 3 contracts. And then we're going to talk again about rejection blocks. Now, a rejection block, if you haven't seen my other videos, I think on one of my masterclass videos that I posted publicly, not the live ones, but publicly, I talk about rejection blocks. This candle's a rejection block. It's got a long wick and it takes out sell side liquidity. So I mark that out, and what I want to see price do, I want to see the bodies respect the 0.5 level. So essentially, the next position I took, when price came back down here, right? Price came back down here and then started to reject, I went long, right? Trusting that this rejection block would hold after taking out time-based liquidity and the fact that we're sitting within silver bullet, which again is from 2 to 3, right? So multiple positions there, and again, this contract could come off here and that would already be a 1 to 2 because the stop loss was right below this swing low. So again, this is a busy. This could have been another opportunity too. I didn't want to take any more contracts in, so I just let that ride out. But I was marking out price. And again, what you see is we tap back into this, and you might be like, well, what's this? This is a 5-minute bearish fair value gap. So my advice, this trade that I'm taking is against order flow because we've initiated bearish order flow at the start of the PM session, right? So if you're ever doing that, if you're counter trend trading, which you can do and you can still be profitable doing, whenever you reach a high time frame PD rate, whenever you reach a point of buy side liquidity in this case, just be careful with your stop loss, mitigate it, take partials, whatever you need to do because you're going against the order flow, right? Now, my eyes said, okay, I'm going to take most of my contracts off here because this, if I wanted to, would be the place that we'd probably reverse. And you might ask, well, why would it reverse from here once you've already taken out this sell side? Well, there's still all this sell side to take out, generated from London session. London session lows, right, are still ready to be taken. Accumulation still ready to be taken. There's so much here to be taken. So I wasn't trusting that we're going to go and continue up forever, right? Because this massive reaction to the downside here on the 5-minute chart, I didn't trust that. So that's one reason or 2 reasons. And another, if I grab my Fibonacci from this swing high to this swing low, right, notice that that fair value gap rests above 0.5. Again, the market moves from premium to discount. We're in a level of premium here. That's where you want to be selling. That's where you want to be taking your partials. And let's see what price does. That there is your indication, of course, right, that we're going to go lower. As soon as we break down here and then we start to break down here, like that's clear. We're not going to move any higher. So if I go back now to the 30-second time frame, let me kind of show you the price action and what I kind of read with price. So some partials came off of this swing high, right? Then obviously I entered a contract here, which wasn't a great risk to reward. So these contracts came off at the start of that 5-minute fair value gap. A majority of the other contracts came off there too. When we started to have this reaction to the downside like this, I took off the rest of the contracts and then I was just tape reading price. Now, as you can see here, I've marked out this too, which is a bearish order block. So we've returned to this 5-minute imbalance. We've had a shift in structure here, right? We've inversed this fair value gap and this fair value gap. Price is already bearish. We're probably going to head lower. Look at how the bodies respect this order block. Yes, we come past this sell side imbalance, buy side inefficiency, or this bearish fair value gap, but look at how we respect that order block. So people ask me all the time, this is some like moderate to advanced stuff. They go, well, if we disrespect that CB, doesn't mean that we're going up. Doesn't mean that we're going up. Well, yeah, most of the time, yes, but you've got to keep in mind or think about what's just happened in the past. And what's just happened is we've returned to a 5-minute imbalance and we've dramatically rejected from that point. You get me? We've dramatically rejected from that point. So at this stage, because bearish order flow has already been initiated, we've already rated liquidity here and tapped in this imbalance and rejected from there. I now still have a bearish bias for this session. So in terms of my bias, a long-term bias is good to see the overall price directional movement, but if I'm trading session to session, I'm looking at what's happened in the previous session. So if I'm trading PM session, I want to look at what's happened at lunch and during the AM session. If I'm trading the AM session, I'm looking at London. If I'm trading London, I'm looking at Asian, if that makes sense, right? Just to see what that's done. That's where my bias comes from, not from the daily. The daily is a long-term bias, which doesn't have to be right because I'm not trading on the higher time frame. So there's your order block. We're coming back down. And look at that sell-off. Like, look at that sell-off there. That's just immense, and that's just intense as well. Like, you could have entered a short from here, and you might say, well, where did your stop loss go? You entered a short from here. Let's be modest. Put your stop loss above that swing high if you really want to. Target these swing lows. If you want a 1 to 2, go for it. You know what I mean? So it depends what you want to do. Some people want to go consequent encroachment, but you don't always get tagged. You don't always get filled. Yes, you can have a better risk to reward, but you don't always get filled. So we've talked about a lot in this video. If you need any more clarification, I'm always happy to help. So these videos are always going to be free. Obviously, I've got the Discord, like I've said in the previous video, but I'm going to keep making these videos. In terms of masterclasses, I'll most likely be running one once a fortnight at this stage. That's what I'm thinking of. I've got some ideas as to what I'm going to cover. But apart from that, if you guys have any ideas, leave them in the comments. If I forget to talk about something, then just let me know, remind me, because I get a lot of messages and whatnot. And again, if you've got any questions, send me a message on TikTok. I will be starting a Telegram channel soon, and that'll be completely free as well. I'll just be posting screenshots of different trades that I take with the analysis attached, so you guys can kind of see, both the executions, but also like what I entered from, and etc, etc. So if you want to join that, I'll post a link to that in the next week or so when I get that updated. But apart from that, I'll talk to you guys soon.